when you're under that pressure, you come up with some creative things to make it work.
This is Property Investory, where we talk to successful property investors to find out more about their stories, mindset, and strategies. I'm Tyron Sham, and in this episode, we're speaking with property developer and managing director of Avenor, James Paver. As the leading player in the commercial and mixed-use development market, delivering a hugely successful $413 million office project from inception to completion, we hear the inspiring story of how he got there and much, much more. We delve into what a normal day looks like for Paver.
These days, it's a matter of trying to get the guys back to the office because of COVID. So today I'm in the office, gearing everything up, and so starting getting the split shifts going next week, I think. So, which is good. But typically, it's a matter of working with my team across commercial and residential projects in Sydney, principally at the moment. And so at the moment, a lot of planning work. So there's a lot of meetings with stakeholders, a lot of meetings with clients and the end asset owners and consultants and builders. So there's a lot of that collaboration and engagement. And so that's a big component of it. And then the balance of it is spent with clients and trying to build some pipeline and then obviously managing the business itself. So it's busy days, but it's good fun.
The COVID-19 pandemic has had an enormous impact all over the world, and we find out how it's impacted Paver.
We're still stemming ahead, really. We've a couple of our major projects. One of our major projects has a lot of overseas stakeholders involved, principally consultant teams. So international design competition resulted in a lot of, so we've got consultants in Europe, in the US, in Asia, and in other parts of Australia. And so we were already operating on Zoom as a platform for collaboration. And so we were already established for that. I suppose we would have done more face-to-face involvement if it wasn't, but we're still steaming ahead. And that's a pre-committed office tower development. So in terms of the COVID impact to the market risk, that's been minimised for the most part. And in terms of the resi side, it's mostly okay. So there's some planning stuff at the moment, so it's not particularly impacted. But I think the collaboration part and the, I suppose, team building part of it is going to be critical to ramp up again. That's why we're getting everyone back up and running next week.
We learn more about his background and the area where he grew up and the school he went to.
Grew up in Sydney, grew up in Epping actually. So, but living in the CBD for a number of years now, in amongst it. Went to King's in North Parramatta, and so I was pretty close by. Yeah.
Paver shares with us his journey after finishing school and what he decided to do straight after.
I actually took a year off and went over to Europe, and I taught English in Poland for 6 months. Believe it or not, I had absolutely no money, so I worked a bit in the summer before. Worked in a pig factory in Liverpool for a little bit and got some cash together, and then went over there, and because of that, I while other people would go into London or whatever, Poland was a good place where you could be somewhere a bit different, and then go weekends or whatever it is into the rest of Europe. So that was good, and I travelled around for 3 months after that. A few adventures. Worked on a yacht in Croatia, on a luxury yacht owned by Greg Posh, who owns Star Trek trucks for a while, and sort of got some money together, and then travelled around Italy, Germany, France, and London. So that was good, and then after that headed to uni and started in property economics, and so that was where I suppose the property journey started. But throughout that time, I was working in. I joined the reserves, and so doing officer training, and throughout university and a bit after. So that was good, and started working for John Boyd, helping him on 161 Castle Ray Street, which is the ANZ Tower now on Castle Ray Street in Sydney.
We find out more about John Boyd and his background.
He's a private developer, so that was, I suppose, where I got my first exposure to commercial development. So that was I think a 55,000 square metre office tower on Castle Ray Street that was delivered by Grocon, and John Boyd had pieced that. Actually, I really liked it. He had some interesting investment models as he was coming up, and he sort of built some wealth and started accumulating these properties in the CBD, and then off the back of that, he put together a Freehills lease and an ANZ lease that underwrote the development of that project. Now he owns the penthouse up the top of that, which is interesting.
He went travelling early in his life, and we find out why he chose to go to Poland in particular.
To be honest, I don't know. It was through this program where they, you go and teach English, and I'm not usually one to just go down the well-trodden, standard path. I usually do something different, I suppose. So that was, I suppose, led me to pick somewhere that was in stone's throw from the rest of Europe, but could be a bit weird and different.
After travelling all over Europe, he tells us the reason why he decided to come back to Australia.
I was keen to rip in. I think it was just go and get a bit more worldly and go out and, make mistakes and have some fun and then come back and start, building a career. So I wanted to get into that. And so that's what I did. And I was excited to get into it, yeah.
After coming back, he jumped straight into university, and we learn about his interesting experience while studying.
You do it in the holidays during university. I think it's one weekend a month, and then there's a few different modules that you do, but they might be a month long in the summer holidays, and the rest of them are 2 weeks long, and you go out, and some of them are pretty interesting stories. Like I think on the third module, like in the middle of, throughout uni, in holidays you're meant to go and get a rest, right? But then I went on this one, and part of the training was doing these 12-hour missions back to back. So there was eight days worth of this. So you'd average an hour sleep a night. Some nights no sleep, some an hour or 2 hours, and so then so that was interesting. So then you come back to uni and you're pretty exhausted, but it was definitely worth it. It gave me some leadership skills, gave me I suppose, a greater understanding of people and how to work with people and how to work under pressure and high intensity pressure, I suppose. And then I worked through that, and but eventually I started working during uni at Investec Bank, being that the investment bank, and in the property team there, so the structured real estate finance team. And so there was this point in time where I was at university, final year of university, working in Investec Bank, in the army still, and started becoming a bit overwhelming because I was kind of doing these three intense things. And so then army was one of the first things to go, and then uni wrapped up, and then I was into the banking world. So it was high net worth, property development, investment banking.
Many people struggle to find their ideal job straight after university. Paver explains how he was able to get himself into that position in investment banking.
At uni, I was at UTS, and they had a few different scholarships that they would run, and one of them, Investec Bank, would recruit from UTS, or that team would recruit from UTS, and they essentially, I think it was something like that, they'll give you a few grand to do a 3 months work experience thing, and if you do all right, then you'll carry on. And so I did that, and that was in 2010. I think that was. And so it was still pretty rough in the banking sector post GFC. And so it was a time where they were going through a bit of a restructure. And so then but during that phase though, it was, there was still, still deals getting done and a book that had to be managed and all of that sort of thing. So that was where, and it's sort of thrown in the deep end. You learn, as much in your first week doing that as you do in your degree.
We delve into how he met John Boyd and the job he had where he gained some valuable experience.
My uncle had introduced me to him and had landed me that job. And then that was just sort of a junior assistant DM sort of role, learning how offices work and how the world works, I suppose. And really that original one with John Boyd. But then after that, it was at Investec, it was as an associate doing property finance analysis and managing transactions through and managing existing debt books and mezz books. And so and through that though, it was very interesting. I really valued that time because what it showed me was it gave me excellent exposure to high net worth property developers and investors, and across all sectors, across all geographies in Australia. So it meant that I developed an understanding around how the whole deal works across all the sectors, and exposed me to some really interesting and really, I suppose, successful individuals, and let me analyze and look at their business model so that eventually I could start adopting them and applying them like I'm doing now. So, I mean, I don't know, maybe I won't need to talk through some of them, but some of the smart investment models that they would apply, which, focused around, minimizing, on one end of the scale was minimizing the amount of equity they're using by, securing, underperforming assets and, increasing that performance, getting bank debt against it, using that extra debt to get DAs, generating extra value out of the DA, going back and getting more debt to generate, to deliver the project. And out of a small seed, they've generated this big book of value, of profit, but also the retained asset that they'll maintain. So then there were these clients that would have these book of assets. So some of them, like this one client had left school at 13 years old, become a panel beater, and then, 17, 18, sold Fords and Holdens, and then he started doing development with his brother, and now they've got a book of over $500 million worth of assets. And when I was doing it, it was just a bit under that, and he was only 40 years old. So you see some of these models, and some of the rest of them, like some of them were a bit more cookie cutter, doing subdivisions. Some of them were, how to structure joint ventures and how to piece it together. And there was a bit of that I learned, I suppose, through that. It made me think, well, maybe I want to be on the other side of this fence rather than the bank here sitting there and having them brought. And I suppose it was around that time where I started forming a view of, well, I want to eventually own my own firm. And before that, I'd always thought I do want to own my own firm, but I didn't know what field it is. I didn't particularly care, to be honest, of what I would do, as long as I sort of could start building my own future. And then I made a decision around that time. Well, if I want to do that, do I want to go the funds management route and learn that skill set, and then eventually supplement that with someone else's skill set in development, or the other way around? Do I want to learn the on the ground, development skills, and then and then build, and then supplement that skill set with third-party capital experience? So I thought, oh, well, now I've got a bit of banking experience, I'll go the development route. And so it was a while after that I started working at, I got a job at Leighton. I got, through the closure of a lot of the banking institutions, Investec had a round of redundancy. So I snatch that opportunity and jump ship over to Leighton Properties. So that's where I started building the development skill set, I suppose.
Paver talks us through another example of a development that his client has in his development portfolio.
That particular one was pubs. Actually, I think it actually started off as a post office was the first deal he did, I think. But then he built a book of pubs, and then just before the GFC, he had a book of 13 pubs or so, and then just before the new smoking laws, he sold his book of pubs, and then the smoking laws came in, and then pub values dropped, and so he sort of cashed out at the top, and that kind of gave him some cash to start rebuilding his book. And then so that was, except then it was pubs with resi attached to them as part of the developments.
Some people struggle to get a foot into development side of property, but Paver details how it is possible to get into property development.
I was always sort of trying to think about some. I'll talk about myself in a while about how we did, but for the others, I think some of it was, a lot of it's through hustling with landowners, I suppose, and so being able to put the deals together. I'm just thinking of a smart developer out in Perth that was putting together, like a very straightforward, but was putting together sites that had development capacity. It was a matter of he would pre-sell the end product and increase, but and it was simple products like $500,000 for an apartment or whatever, and he would pre-sell them with except say under an option arrangement, and say, oh, if you put in $250,000 now, then I'll give you a discount on the asset, and then that cash you would use to put into the acquisition of the site and the like. So, and then through that he would package up the whole development, deliver the development, and so these mum and dad investors or mum and dad owners would, I suppose, be participating in the development process, and he wouldn't have to use any of his own cash, but he would participate in the profit. So it was, and then because he had a building book and a sales book himself, he would clip the ticket on the building margin and the sales, and obviously the profit on the development without using any money. So yeah, and that's a pretty standard. I mean, it's not a standard one, but I just know that he executed that model really well.
For listeners out there who don't know what book means in this term for development, can you sort of just elaborate and explain for them as well too?
A book of a pipeline of numerous developments that are being delivered at any given time. So usually associated with your balance sheet, how many projects or assets you have on your books.
We discussed his time working at Leighton and the lead up to when he decided he wanted to start his own business.
I went across to Leighton for initially principally for a commercial development in North Sydney, which was called 177 Pacific Highway, which is now the Vodafone Tower in North Sydney. So it was a 40,000 square metre A-grade office project, 5-star Green Star and 5-star neighbours. So it was and it was an A-grade asset. And so I came into that before commencement in the establishment phase, I suppose. And it was it's essentially holy grail of commercial development for a developer, I suppose, in the sense that it was a pre-lease, pre-sale project. So Leighton, we essentially secured an option over the existing site, and had a 30,000 square metre pre-commitment for a lease pre-commitment. And so with that, it means that you essentially can underwrite the development with that fixed cash flow that is going to be available to whoever owns the building. And so we secured the building contract with CPB, and then packaged that up, and then pre-sold that package to a group out of Singapore called Suntec REIT. And so, and they're a passive fund. They don't take development risk. And the deal essentially was that they will fund our initial establishment costs and 100% of the delivery costs, including our profit. And then on completion, they get the keys to an asset that is fully leased. And so as a developer, we had to take on the development risk. And so we would pass that down to the building contractor for the actual delivery risk. The residual risk for us then was the leasing. We had a 30,000 square metre pre-commit, so there was 10,000 square metres of vacant space. And then as we were delivering it, it was in 2014. So the leasing market was weak and incentives were high, and so we had to. So the pre-commit, which was Leighton, it was CIMIC Group. They contracted their headcount, and so they only needed 8,000 square metres now. So the job of now over the balance of the project, year and a half, I had to lease the balance of the 32,000 square metres of vacant space. and if we didn't, then there was a rent guarantee over all of that space, which would amount to, in the hundreds of millions of dollars. And so I embarked on that process, and then progressively leased to Vodafone, Jacobs, CBRE, Cisco, Pepper, Objective, and NBN. And then the NBN lease, which was the last one, I cut on the day before practical completion. So it was so we got there in the end, and it's a great project. So
how long did that process take you to find these tenants?
It was a bit of a hunt. So we had CBRE on as our leasing agent, but it was so from 2014 we were into the leasing process for the balance of space, and then I think through the course of 2015 I closed the most of the deals, and then the fit out started happening in 2016, and so throughout it was about a year that I did most of those deals. You kind of got to be creative with what you've got at hand. So because there was pre-agreed structures with the end owner who was receiving the asset, they playing tricks with the incentives to be able to work out, okay, well, if we generate enough income out of the sign, so we might have allowed a particular amount of money for the Vodafone signage income there, and then we do a lease with them for that at a different number or whatever it is, then that money can generate enough revenue out of the end owner to then feed back into the tenant's base rent, I suppose. And so there was a few things like that going on to try and make it stack. But I suppose when you're under that pressure, you come up with some creative things to make it work.
We find out how he was able to pick up all of this in such a short span of time.
I suppose in the first instance, I had really good people around me. So I think that, so at Avenor, my business partner, Pete Clemisher, he was at the time at Leighton as well, working on the same project. But he left early. He left in 2014 before these were doing. But around the same time, Steve Rayleigh, who was the national head of leasing at Leighton, he was still there. So his role was winding down. But so I suppose in the first instance, I, gathered as much, as I could from them to help me on that journey. And then, so that was one part of it, having the right people around. So now Steve works with Avenor as well. So there was that. But then the other one is, feel I have a very determined person, I suppose. I've got high ambitions and I work pretty hard. So I enjoyed it. So I was very excited to be able to learn all this stuff with knowing that the end goal was going to be, I'm going to go and do this stuff myself. And so models like that, where you're putting in a couple of mil and making 60 out of it, is and I suppose enough of a carrot to want to learn it pretty quickly.
We delve into his property development journey, and we find out whether he's faced any challenges along the way.
To be honest, it's It pains me to say it, but it's yet to come. I think. Except that's not me saying I don't make it. I think because I'm still quite young, I'm fully aware that there is going to be stuff that happens. I think we do take a lot of care and put a lot of effort into minimizing risk generally, and so we don't just go for any deal. And deal volume, I suppose, isn't our strategy. Accuracy is more our strategy. So being able to take our time, select the right deal, select the right approach, and then not overcommit ourselves to a level that means that we're exposed to something that we can't withstand. So I suppose in doing that, we minimise our risk. One of our projects at the moment, an example of that, I suppose, one of our projects at the moment is a residential tower development in North Sydney, Walker Street. And so that deal has been a slow burn. We started amalgamating individual units in 2016-17, and then we've amassed a 2,500 square metre site and done a deal with the next adjoining owners to create a 4,000 square metre site, and we've now got state approval for a 30-storey tower. So it's a big, it's a success in that we've now got approval, but there were definitely moments through that journey where you feel like you've just burnt a lot of money on a site that's not going to come together. And so there was definitely moments through that where the risk was high, but I suppose persistence and the way that we set up those deals in the first instance meant that we minimised the risk of it not coming off.
Paver talks us through some of the challenges that he faced to get these units to come together.
There's no residential tower sites in the North Sydney CBD. They are very, very strict on maintaining the commercial core, and so this is the only R4 high density residential site in the North Sydney CBD, and it's on the Warringah Freeway, and it's next to the Warringah Freeway, and so it'll have permanent uninterrupted views of Sydney Harbour and the Opera House and the Heads, and so it'll be a very highly sought after product once it comes online. And so I think part of that meant that the initial landowners, the people who own the units, they weren't going to move unless it was outright buying, essentially. And so to do that, we mounted a war chest and had to go in and start working through each unit.
We find out about his financial situation at the time and how much he was able to accumulate.
We bought 24 units, and then came to an arrangement with the adjoining. There's 3 more lots to our north, and so I think for a planning outcome, it's a good outcome to have. So these are the only undeveloped sites or developable lots in that area, and so originally we were just going to go with ours, and those would have been a separate development needs to be pursued, but we came to an arrangement with the states essentially saying, we'll put the planning across theirs as well, so that we all participate in uplift and we can redevelop the whole precinct so that there's no chance of isolation or anything.
Paver details what his initial vision was for their area.
It's a very obvious one. Around next door is a 22-storey resi tower. Over the road is another 23-storey resi tower. And around the corner, council's rezoning its own car park to be a 60-storey tower. And around the metro station is 200 metres away. That's going in at whatever that is, 50 stories. And then the next one down, Winton's delivering the Denison Street, which is 40-something stories. Dex's just finished their 100 Mount Street, which is similar height. So and the North Sydney CBD, the council has lifted the height across the whole CBD. So there was this huge uplift. These are these little red roofed apartments that were built 80 years ago, and they're kind of falling down and the like, and it's in the CBD. So we started off on it when I was still wrapping up the Vodafone tower, hunting around for what's next, and so as that was coming off, I started turning our attention to that.
Getting into development means that you'll need to invest your own capital into it, but the way the deal is structured can help you immensely.
So I suppose that's one example, and then one other one that I suppose it's not just it wasn't necessarily about another one that's been a slow burn but has been successful of late is our approach. So we in 2014 we started having a go at so Google was in the market as a tenant, and we approached the state government and said, we want to put a tech precinct together for Google, and we're going to do it at Glebe Island. And so we had a consortium of John Holland and MTR who run the Northwest Metro Rail, and we had and then Leighton we were still at the time, and Google, and we started doing that together. But Leighton Group went through a restructure, Leighton Properties closed, and so Google started off again with Lend-Lease, and the state took that asset to market. So that was the first crack at a tech precinct. And then around the same time Atlassian were looking to where they could potentially anchor a tech precinct, and we were looking at Australian Technology Park with them. And then at the same time, or similar time, the state government was out with White Bay for the next round of tech and innovation precinct at White Bay. So that didn't go ahead, and so we've been involved in that world for a while. And I suppose in terms of things not coming off, that for a number of years was just not happening for us. We were having a few cracks, a few false starts with different capital partners, with different tenants, and so we bid pretty hard for White Bay with some capital out of Singapore, and then Multiplex came in as our delivery partner initially, and then that process wrapped up for the open, for the market. And then but we worked really hard with Atlassian, and then eventually, and you might have seen in the press over the last couple of years that now we've secured a site at Central Station, and we're anchoring a new tech and innovation precinct at Central Station in Sydney. And so it's like similar to the Walker Street thing, is this roller coaster of you putting in a lot of energy and over a longer period of time, and then then you work your way out of those risk positions into a position where then they start you start kicking some goals.
Having to invest your own capital into deals might make it tough when it comes to other expenses. So we find out how Paver is able to balance everything.
I suppose part of it, when we kicked off at first, we didn't have much of our own balance sheet. It was doing these sorts of structured things where we essentially bring the institutional knowledge of a tier one development firm, being Leighton Properties, and then we white label that team, because we had a number of people from the Leighton team that Pete and I brought into our team, and then we started building out the team around us, and so we would white label that into non-development firms. So landowners who don't want to give up their asset or want to retain an asset on completion but don't have the development expertise, we will white label in and deploy our skills for them, and then participate in the profit or participate in whatever it is. So there's that sort of thing. And then other ones is, I suppose, cash flow is which is what you've identified, I suppose, is critical to it all. So we landed a $1.1 billion hospital project in Brisbane, which is Hurston Quarter, run by Australian Unity. And so they were one of our first major projects which we started working on with them. And so I think there was a lot of that service-based revenue that in establishing some of these. And then in that, we would structure some success fees. And so it would essentially be in exchange for deploying our, I suppose, IP on behalf of these firms, we would structure in, which we could do in a particular market, call it Central Station. We could deploy that across a number of sites down at Central Station with a number of parties, and we would say, okay, well, if we partner with this group, then we'll participate, and then we're committed to that site and that. So I suppose that's how we kicked it off, and then that gave us a bit more firepower to be able to take a bit more risk, I suppose.
It has been an interesting journey for him, and we hear about the moment where everything just clicked for him.
It's a tough one. I suppose I feel like I'm coming into a bit of a moment around that at the moment. The next 12 months is going to be quite formative. Some of our revenues will be dropping over the next 12 months, but will be, I suppose, coming in over the next 12 months, which has turned my mind to the next strategic phase of our growth. And so I'm starting to build some more governance structures, bring some more skill sets in so that I can posture ourselves for raising capital, deploying our own balance sheet on a bigger scale. And so I think the aha moment is, I suppose, the last 4 years has been a lot of grind and a lot of, like I was saying, sweat equity. And then now, as I see the opportunity that comes from some of this, having some balance sheet deploy, it kind of makes me think, that is absolutely a ticket towards opening up a whole lot of opportunity that before I felt like wheels are spinning a lot. Now I can start saying, so the way that I'm thinking at the moment is a bit different, I suppose. And I suppose that's an example.
We learn about one of the strong motivating factors was early on in his property journey.
When I was choosing to go and do property economics, I was just at a bit of a loss, to be honest, about what the options were at hand. I think part of it, I didn't want to do something that was just a placeholder standard thing. In fact, that's probably a common theme across a lot of what I do. I don't buy into just standard run-of-the-mill, living, I suppose. And I'd heard a bit. I think I just heard from other people that property is good fun. I didn't particularly know what it was or how it works, and that I knew that you could make money out of it, and I knew that. And then I suppose part of the decision making around the decision to go from banking to development, that's probably part of what I can probably talk to, is that when I was at uni, when you in investment banking, you've got a huge amount of people that have ended up there because they've done commerce law degrees and they're hyper competitive, and they're at school, so they're highly intelligent people, and they're working really long hours, and they make a particular amount of money, and they're in a structured career progression that you are at the mercy of the control of a lot of other stakeholders and senior stakeholders that can probably influence your success or not. Property, I kind of formed this view, rather wrong at the time, that you're not in a space where, was particularly in, I suppose, the early days of it, or you're not in a space where there is hyper competitive commerce law guys who have got 99 or in their high 90s UAIs and are sitting at their desk, and so I felt, well, but you can still make just as much, if not more money, and you can I suppose work less if you work smartly.
It's like book smart versus street smart. If you're street smart, you don't necessarily have to have all these qualifications and degrees and everything to get into property development, because it's about relationships, it's about hustle, it's about persistence, grinding, the hard work, that kind of stuff.
Yeah, so I saw some of those clients at Investec, right? And like a bunch of them had never gone to uni. Some of them, like that guy I was mentioning, you left school early. And some of them were, and so then and so it's not about, I suppose, that it's not a competitive industry. It's a really competitive industry, obviously. Like every man and his dog know about property and are an expert in property because they own a property, and so it's not that you get away from that, but I think it's that I was doing a lot of long hours in Investec, and I was made redundant there. And then at Leighton Properties, it was the same. It was working really long hours and in an institution, and then they, because of structural decisions that were made at a higher level, they decided to restructure, and then I managed to strike an arrangement that worked well, that was part of a redundancy. And so then that was twice, and I was like, well, I'm going to take it into my own hands and do what I suppose I was always wanting to do, and start putting things together. And that's, I suppose, where the thinking came from.
We talk about the idea of mentorship and his experience with people throughout his journey that can provide assistance.
I was lucky enough, so at Investec Bank, David Gonski was the chairman, and so when I was setting up Avenor, I'd reached out to him a couple of times before, and then I just went and caught up with him, and I suppose being able to just have a chat with someone like that gives you a really good insight into your, I suppose, potential in business. And so, but I wouldn't say that he's sort of a mentor, because it's not like an ongoing thing. But at the moment, that's something that I've identified is something I want to build on. So I've started the process a couple of months ago, putting an advisory board together for Avenor. So speaking with some, I suppose, executives and managing directors that I've come across over the years, I've started to do just to start piecing together who the right people are to put some strategic, input into the firm, and then some, I suppose, governance oversight into the firm. And so speaking with a few people about that, and so yeah, hopefully that comes along.
Paver shares some of his best book recommendations, along with any other resources that might be helpful.
I've kicked off some business coaching at the moment as part of this. Like I was saying, next 12 months strategic growth is, we've got business coaching and advisory board and some new hires as part of that. But one of the ones that I've just started listening to is The Road Less Stupid. Yeah, I've literally over the last couple of weeks I've been ripping into it, and it's essentially exploring this concept of how intelligent investors, and this actually rings true for those clients from Investec, where a bunch of those people had been bankrupt once at least, but sometimes a couple of times. And so The Road Less Stupid is about this concept of avoiding dumb tax, which is where, as a result of poor decision making, you make a loss. And so what is it that you can do to minimize, still maintain your revenue growth, but minimize the risk of loss by avoiding stupid decisions? And so I know the chapter I was on last night is talking about thinking time, and so they're talking about having a particular period in each day, or period of time in each day, short period, where you just sit and think about the big issues and actually accurately identify problems that need resolving, and then come up with a strategy to solve them. I haven't started yet because I only did that yesterday, but it was interesting.
We find out the advice that he would give to a younger version of himself.
Yeah, I suppose I'd say do what you're doing. I'm kind of really enjoying what I'm working on, I suppose. And it's it's definitely a lot of hard work, but I think being able to find the right balance in that work. I think in the early days, actually, if I could talk about the early days a bit, I think working a bit smarter rather than harder could have helped. A lot of long hours, late nights, slogging away, trying to work through it. And then in hindsight, there wasn't many other people doing that. So maybe I could have shared the load a bit, I suppose. And then, and then surrounding yourself with the right people.
He shares with us some of the goals that he's most excited about achieving in the near future.
Definitely about the building the firm and building the capacity of the firm for the funds management component, or I suppose the being able to raise more capital and deploy more capital, I suppose, and definitely building the team to, I suppose, supplement that skill set into the team is definitely something that's exciting. And then if I go to the end of that 5 years, definitely looking forward to having completed some major projects. So that Atlassian Tower at Central is like a 70,000 square metre office tower, which, is part of that tech precinct. It's been on a very long journey. And so in 5 years, that'll be complete. And so it'll be good to be able to, stand here and look at that and, see it as one of the most sustainable buildings in the world. I think that'll be pretty exciting. Yeah.
So the last question I have for you is, how much of your success is due to your skill, intelligence and hard work, and how much of it is because of luck?
I would say luck. Lucky. The luck component of it is that I, born into a good family and have a good set of morals and surroundings. So I'm definitely very grateful for that, and I did nothing to deserve that part of it. But since then though, I definitely attribute it to a lot of, maybe 80% of it to the hard work component. The luck component of it might be that I think the redundancies that kind of force you to make a decision. If they didn't happen or they kicked down the road, then who knows what might have happened. Might be in a different firm, or might have just wanted the golden handcuffs might have been put on, or it would have been too hard to get away. And so being able to get that nudge, I suppose, is definitely help. But it's taken a lot of hard work, and it will continue to take a lot of hard work. That's for sure.
Thank you to James Paver, our guest on this episode of Property Investory. If you want to hear more about his journey and get a copy of the show notes on the website, head over to propertyinvestory.com/notes. The show notes will give you the inside scoop on the little gold nuggets of wisdom all our guests share from their backstory and all their overall strategies and philosophies. Plus, you'll get a copy of the advice broken down and shared in a quick and easy to consume format. Just head over to propertyinvestory.com/notes and download it today. Thanks for listening.